this is how price moves. Price moves to what? In this manner. This is what a higher time frame, let's assume 4-hour time frame swing high and swing low. But within that 4-hour swing high and swing low, there's what little structure within them on lower time frame, unlike 5 minutes time frame or a minute time frame. There's still what little structure within them. There's still little what structure within them. So what we call what sponsored candle is this last candle here, this last pullback candle here, this last what pullback candle here. That's what we call what sponsor candle. Now our main definition of sponsor candle is this: any candle that based on this time frame, this 4-hour time frame, any candle that takes a low before breaking a structure high is what is sponsor candle. Look at this low here. This low is being rated by this low here before taking this high. So this is what is sponsored candle. This is also a sponsor candle. Why will you call it a sponsor candle? Because it takes most of these lows. It takes most of these lows. It takes almost all these lows before what? Breaking structure to the upside, before violating structure based on what time frame difference. Before what? Violating structure. Before violating structure. Then it took this low here, giving us what? A grab of what? A grab of low, a grab with low here, or let's call it a grab of what? Liquidity. It grabbed what? Liquidity here. Watch. Excuse me. So it grabbed what? Liquidity. So it grabbed liquidity here, making this one a sponsored candle. The same thing will happen around this area. Let's assume this one also grab this liquidity here, grab this little structural low here, grab this little structural low here. We call this what? Last move here is sponsored candle. We call this what? This move here is sponsored candle. So this is our sponsored candle. This is sponsored candle. Then another sponsored candle is this what? This last high here. This last high before price what? Change trend based on one time frame difference. This is our what? Sponsored candle. The last candle, be it what? Bearish or bullish candle. We don't care if the candle is bearish or bullish. So the last candle here is also what? Sponsored candle. The last candle here is also what? Sponsored candle. So that is that. Now you look at this. There's a sponsored candle here. There's a sponsored candle here. It will grab this little liquidity here before breaking structure, making this one a sponsored candle. This last candle here is also a sponsored candle. It grabbed this little liquidity here and also grab most of this liquidity within this zone. So that is what your sponsored candle. That is what sponsored candle. And this is your structural high. Where price will break, then we call it what? A break of what? Structure. Where price will break, we call it what? A break of structure. Once price take this high, we call it what? A break of what? Structure. BMS. We call this high what? A break of what? Structure. Once price take this high. So that's what we call what? A break of structure. Once price takes this high again, based on this time frame, not on lower time frame, based on what this time frame, then we call it what? A break of what? Structure. And our break of structure, we don't care if it is weak or body, because you might call it what? That is what? A grab of liquidity on let's assume on a daily time frame, that it grab liquidity because it's what? This last high that price created here, created it with weak. It created this last high here with weak. After creating this last high here with weak, before price is reversed, then if you call this one that this is what? A grab of liquidity, because it's weak on this daily time frame. But when you go to forward time frame, it might be what? A full body. So our bid 0.1 pips. Once market breaks what? A structure, a break of structure is a break of structure. So majorly we'll be learning how to differentiate a break of structure from what? Grab of liquidity. So when we be learning those things majorly is what when we be learning what Wyckoff. So Wyckoff will be giving us what price we do. If price is about what start accumulating, and we know that it will what start accumulating. If it's about what reaccumulation, we know even without knowing volume, you will read it with what with price. Also what we also teach you volume. So that is that. Now we have a break of structure here. We have what a break of structure here again. Now after this break of structure, that's how the market give us what. Then we what here we got what a break of structure to the downside. We call here a break of structure to the downside. Market what break structure to the downside. Market what break structure to the downside. Market break structure to the downside. So this is how market moves. Now after market breaks a structure high like this high, price can decide to what to give us what we call manipulation based on this month one what we are learning now. So after market breaks what this swing high, price can decide to give us what a long ranging above this high here before giving us a pullback. So this is what we call it will give us this move here to what to trick what people in. Then we'll be thinking that market is what is not coming to retrace to this level. Then when it takes any of this low, we'll be thinking that is what a break of structure. So those ones that it takes before taking this swing highs, those are what we call our minor structure. Those are what we call minor structure. All these little higher low, higher high within these structure highs are what we call minor structure. In this our first teaching. So those are what we call minor structure. That is how price works. So it will come sometimes read one or two of this minor structure before continuing the next move. So that is how price moves. So this last candle here is what we call sponsored candle. The last structure high, the last candle here there before price would change trend to test any of these zones is what we call sponsored candle. So that is all about what sponsored candle. And this is our swing high, swing low. So anytime market breaks a high, it always give us a fake hard move. It always give us a fake hard move. Out of the range. It always give us a fake hard move out of the range. So that is that. Now let's look at this pair. Now after market, let's take it from here. Now after market market would totally on downtrend all this while. So it got to this very point, create a low, create a lower low, a lower high, create a lower low. Instead of market to create a new lower low, it failed here. It failed here. It create what a lower low, lower high instead of market, because all this white has been creating what a lower low, lower high, lower low, lower high, lower low, lower high. Though it take this low. So that is that. Then after that, based on what time frame difference, this low will be what based on what another time frame difference, higher time frame low, like daily time frame low. So here we got what a break of structure, meaning market has what changed a trend. This is what we are learning this month. All is what introduction topic. So after market gave us what a break of structure, making this one a swing low. It couldn't take this low. Any longer. So we got what a shift or structure here. Market broke structure. The market came here again, broke this swing high. broke this swing high and ran into this zone. Took what a little internal liquidity, little what, not internal, let's call it here now. What little minor structure. This is higher high, higher low, higher high, but it's within the structure. It haven't what read this high yet when it was creating those what minor structures. When it was creating those minor structures, it haven't what read this high yet. So we got those minor structure being created. So after price created a minor structure, the minor structure retraced back, giving us this candle here as our what sponsored candle. It took this what this little minor structure here, took this little minor structure here, took this little minor structure here. So making this what this zone, this candle here, what our sponsored candle. So after that we got what a new structure being created, a new structure being created. So we got a new structure being created. Now after a new structure being created, price continue rallying without what retracing to test this new structure that price what broke here. So price continue rallying without coming to what to test any of this zone that price rallied. So it break what a new structure here again, break a new structure here again. Now after price break this structure here again, giving us another break of structure here. So price what did something here. It couldn't take this high. None of this little high here took this high. So we haven't gotten anything like what a violation of what structure here. We have not gotten anything like what violation of what structure here. Price has not what raided any of this structure. So after price created this what liquidity is here, now it came to what to raid the low, but couldn't take this low here. It raided this low within the what structure. Because this is the new BMS we got. So it raided it, making this area what our sponsored candle. The last candle there, our sponsored candle, making that last candle there our sponsored candle. After price made that zone a sponsored candle, price ran again, took that structural high, took that was structural high. Price took the high here. Price took the high. So after price took the high, price gave us what a stop hunt again. A stop hunt again. I told you after market breaks the high to what stop hunt to give us what a fake out move before what coming to read what some minor structure, which is what structure within the what structure. This high here, higher low, higher low is within the structure high to the structure low. So that is that. So after price did what he did here, so market what went up again to create a new structural high, making this what is what a new high, making this level what a new high. So after price made the new high, price retraced down again to what to make itself what a sponsored candle, to make itself what a sponsored candle. So after price made itself a sponsored candle, it changed trade again, making a new higher higher low, higher high, higher low, higher high, higher low, higher high, higher low. The same thing till it get to this very level. So when price go to this very level, it fails to what to take this structure high and violate the last low it created here within the what structure. It violated it without taking the what the new structure high, making it what a break of structure, giving us what a break of what structure, giving us what here as what a break of what structure. So since we are gotten here a break of structure, we call this what lace candle here our sponsor candle. We call this high, this candle here our sponsor candle. So since market has created a new low, we expect market to retrace again, create a new low, retrace again. So market continued creating what a new low, continued creating a new low. That's giving us what a break of structure, giving us a break of structure. The same thing, a break of structure here again, a little structure being violated here again, then retraced down to this what, to this zone of interest, then went down again, broke structure again. Market has been breaking structure to the downside all this while. So market continue breaking structure. So market got to this very particular point. Instead of market to what, to take a what, to create, let me say, get to this again, create a new lower low. Market failed to what, create a new lower low, created a new higher high, giving us what, a structure break here, giving us what, a structure break, giving us what, a new structure break. That's what, a change of trend, giving us what, a new structure break. Now market is supposed to continue creating this lower low, lower high, lower low, lower high, lower low, till what, it take this what, this last recent low. Since market has changed trend, instead of creating a new high, it refused to create a new high. It created a higher low. So here created a higher low. Since market has done that, market is supposed to what, give us what, a continuation of trend to what, to attack this low. But it got to this very particular point, that rule of that downtrend, it violated it here, then before going higher. Now this structure high is within the range, it's not higher than this high. So this is not what, the structure high. This is what the last lower low, lower high created. A lower low was supposed to get a new lower high, but it can just decide to do it any hitting here, but it broke a structure to the upside, giving us what, a change of trend. So market can decide to what, to come and take this liquidity here. So when market come and take this what, this low here, we won't call it PMS. Why are we not going to call it PMS? Because what, this high here is not higher than this high. This low here, the high created is not higher than this high. So this is the recent high we created. Where price broke structure. So it came to what, to grab what, to take what, somewhat minor structure, which price always what, seek for. Took this what, minor structure. Price always need what, minor structure to runs. Before price makes any special move, it always what, need a minor structure. So price what, after price broke structure, this high here is not higher than this high when it created this low. So it created this within the range. It created this what, within the range. It created this within what, the range. So because it created this within the range, you won't call it what, a BMS to the downside. You won't call it what, a BMS to the downside. You look at it, look at where I called BMS here. Why didn't I call this place a BMS? Because this is what, within the range high that price took. Structure high price took. Look at this, there's a little low here. So why didn't I call this place a BMS? Because what, this is what, within the range. This structure is created here, this little pullback is created here, is within the range low and the range high. So this is where we got what, our last low that took this high. Though it what, took little lows here as what, liquidity grab. So after that, market will break structure here. Now after that, we got what, a break of structure. After we got a break of structure, now this is how it become what, our next zone of interest that we are expecting market to read. So market what, did what, trade this high again, giving us what, another break of structure. Then came to this area, continued structure high again, created a new structure high again. After creating a new structure high, now all this while market has been what, creating liquidity. Now within a structure, now within a structure, whenever market change a trend, one thing it do, it will create first sponsor candle. After first sponsor candle, it will now create another sponsor candle again. First sponsor candle being created, one. Markets create first sponsor candle. After that, it will create, this one is not a sponsor candle, neither is this one is sponsor candle. So market need to create what, before market reverse. Most of the times it always creates the sponsor candle before it reverse, based on what we are learning now. So So now market would break a structure. This was what the high. Price created a new higher high. So after price created a new higher high, price created a new higher high again here. Continue making what a structure high. After a high, it retraced a little. Continue again. The same thing. Now price what created a new higher high here. Then later on it made what another sponsor candle here, making this one what a strong zone. So anywhere price makes what a sponsor candle is what a strong zone. So we got what here a sponsor candle. So after a sponsor candle, price what went raided this high a little again, raided this high again. Now after price raided this high, what did price do? It went up again to raid a new structural high, higher than any of these little highs, which is this high. It raid a new structural high, giving us here as our new structural BMS. So since we have gotten a new structural BMS, market will retrace based on, because what it has grabbed a new higher structure, it has taken a new higher structure. So whenever market takes a structure high, it always would take a breath. It always would take a breath. So market took this high. After it took this high, it gave us what a fake out move to the upside here, with little liquidity being grabbed here. Create the last, which is the third sponsor candle we always talk about. Price will always create what third sponsor candle here. Then after that, it took this last high here. Then what came and broke what sponsored candle. Broke what a sponsor candle. Then we call it what a BMS. We call it a BMS, but that is not what the real BMS. Now why are we not calling it what the real BMS? Because structure has taken a new structural high. So because market has taken a new structural high, market will what go and seek for what little of this what structure, this internal structure, that is structure within what this range high, this BMS to this range low. So market will go and seek for what some structure, some liquidity within them before what continuing the what its main structure. Before continuing its main structure. So market give us this little up move here to fake out as a fake out move before breaking structure. And after breaking structure, it created first sponsor candle. Now it created what first sponsored candle. It created what after BMS break structure again. Now it breaks structure to the upside to create a sponsor candle, which price always need. Now price always need to make itself what a sponsor candle. Now those sponsor candle are what we classify as what the main structure. Are what we classify as what the main structure. So price created the sponsor candle here. After that, it broke this structure low. Broke this structure low. Broke this structure low. This is what they call what deep pullback, deep corrective wave. This is what we call deep corrective wave. After first corrective wave, price always would create what a deep corrective wave. Then after that, it make this one second sponsor candle, second sponsor candle, making that one second sponsor candle. After the second sponsor candle, now price need to create another sponsor candle. Here we got what two sponsor candle, three before market would change trend. So we need another sponsor candle, which price created here. So price created this one as what another sponsor candle. Price created what that one as what another sponsored candle. Why will you call it a sponsor candle here? Now it took this high. Now notice something here. All this while Is price making a sponsor candle? Yes, but I'm not noting it, so that you'll not be confused. There's sponsor candle within them. Created a sponsor candle one here. You see it, sponsor candle. Here again, he created a little low here. Created another sponsor candle here. Created another sponsor candle here. So there's a sponsor candle also being created here. Though this one is created here, price has not yet violated structure before it created this sponsor candle. The same thing will happen here again. After price created the lower low, create another lower low here. It created a sponsor candle. Look at it. This structure, there's a wick here that went above this one to as liquid, because price always need liquidity. Now be noting this, all the structure highs and all this type of moves that you are seeing now. Now when we learn wake off, that's what we call this move. This is what we call this move. This is what we call this reversal. On these moves, and all of them has a name. So when they has a name, that's when you will you won't call them a break or structure. When price take this low, you won't call it a break or structure, because let's assume now you have this as a bank climax, automatically secondary test, then selling climax, automatically first secondary test, failure cross action, then shakeout move. Then you know that this is what we call a reaccumulation, that we expect next move. Now after that, price created type 2 distribution, which price did. And if price will create the type 2 distribution here, you will know based on what price has created here also. So that is that. But based on what we are learning now, this is how price is taking some liquidity on both sides, as liquidity grab. It will always seek for grab of liquidity before turning to the main structure. After it breaks a structure, after it breaks an internal structure, then it will seek for liquidity against its own side, then complete its moves, then reverse, then start making a new move. Now within them, you always see that sponsor candle. It will always form a new sponsor candle. Before giving any good run, it must surely create a sponsor candle. Before giving any good run, it will create a sponsor candle. You see, so this is what we call liquidity grab. It's taking liquidity on the opposite side of the main move. Take liquidity before giving us the main move. Take liquidity, which is what we call a manipulation move. So it will always give us this manipulation move. Making that manipulation move is what we call sponsor candle. This manipulation move is what we call sponsored candle. Now this last low here again is what we call sponsored candle. The last low before price reverse change trend completely, sponsor candle. This manipulation move is sponsor candle. This one here again is sponsor candle. This last structure high is a sponsor candle. Here again, when price take this high, sponsor candle. Here again is sponsor candle. Now if the price takes any other, here again sponsor candle. The same thing here again, it created a sponsor candle. There's no sponsor candle around this area. Here again created a sponsor candle. A sponsor candle. Before taking a new structure high that's higher than those structure that we have been naming. Higher high, higher low, higher high, higher low, higher high, higher low. So it created a new high, making this one a new higher high. Then this is the low that created this new higher, that take this high. So this is our structure higher high, our structure higher low. Not these ones within this zone. All these ones within the zone, price is creating the, but they have no taken this high yet when price was creating them. Price hasn't taken this high yet when it was creating all these structural highs. So price took this high here, making it what a new structural high, making this area what a new structural high. So price take this high, making this what a new structural high, then give us what a fake out move before what giving the main corrective move. Any time price what, now let's send this. Now anytime price what is creating a new higher high, higher low, higher high, when you check on lower time frame, there's still what lower low within this corrective wave, and then when it's giving that higher high again, still what little corrective wave within them before taking this high. After it takes this high, we give us what we call fake out move, a manipulation move first before what giving the corrective wave.